Welcome to Upside, where we dig into the stories behind the headlines affecting European venture, all of the dirty secrets that go on behind the scenes. So today we've got Lomax, we've got Andrew, and we've got Mads and myself, my VCs from other mothers, brothers, whatever the phrase goes. And today we're talking about, what do we got? Now we are going to do a very, very kind of typical defense and AI push because we are European VCs, but there is a lot to dig into. First up, we're going to look at the UK and where is the UK at in Europe and what is happening behind the noise of everything that's going on, that's being said about investing and growth and all of that good stuff. Then we are going to dig into a little bit of AI. We've got AI Corner. We're looking at the H1B debacle. Is there going to be some more bodies coming through, some smart techies coming through because of the H1B visa issue in the States? We'll have a look at that. And then we're going to have a look at defense, what's happening across Europe. Germany is a little bit down, what's happening in the UK, but generally look at the defense push. And then we've got deal of the week. Of course, we've got plenty of deals of the week this week. So to start with, let's look at Europe and the UK, who are all making noises. I should put the UK in Europe, really. All making noises about growth, investing, doing smart stuff with AI, building data centers and the like. I'd like to specifically focus more on the UK because there is a lot of noise and let's track where the signal is. And I was listening to Ray Dalio on Steve Bartlett's podcast. And Stephen Bartlett asked him, are you optimistic about the UK, the future of the UK? To which he said no. And then he asked him the same question for the US, to which he kind of also said no. So, of course, economies struggle. We're in this massive AI boom. There's lots of good stuff happening. But the UK is struggling and has been for some time. Inflation is still high. Interest rates still high. Rotation out of UK stocks, highest since 2004. Labour government struggling. The flip side of all this, Trump's recent visit, maybe it's greased the wheel a little bit. US firms have committed to investing 150 billion into the UK. Nvidia announced that the UK will be Europe's largest GPU cluster with 120,000 Blackwell GPUs by the end of next year, which is going to come around in a heartbeat. And we are looking at either government or businesses at the very least being power users of AI to create these efficiencies. But let's look behind the scenes. Mads, if you can kick off with your take as to what's going on behind the scenes in the UK, what's growing, what's not growing, etc.
Yes, and all in 30 seconds, right?
If you can.
Yeah. No, look, plenty of opportunity. I mean, I was talking with founders as late as today, the opportunity to build up, AI labs in London right now, I think are terrific. Not only is there great talent, but I think this kind of, H1B visa debacle out of the US, which we're going to unpack, gives us great opportunity. So there's lots of opportunity. I think that the more depressing backdrop is that despite all of that opportunity, there's still so many places where the country doesn't seem to be able to get out of its own way. And it's clear that in so many of the big things, we're struggling to get stuff done. We've been talking about HS2. We've been talking about the Heathrow's third runway.
Gatwick's been approved.
I saw the Gatwick now approved the second runway, but also, frankly, I mean, that is in the middle of a field in the middle of nowhere. And so, yes, sure, if you live in Kent, that's fine. But Heathrow is the heartbeat of London and our global air traffic, and we have to get it fixed, and preferably before 2050 when we're all dead or retired. We've seen in housing that, 23 out of 33 London boroughs have had zero multi-unit residential starts in the first half of 2025. And that's not great when you have a, massive city of 10 million people and you can't build any housing for them, right? It's just like that, all that stuff stifles growth. So, what can be done? And maybe we're going to unpack kind of some of all the ideas here. But I think there's this backdrop of it's still hard to get stuff done. I've seen the government come out today and say, look, you're all going to get ID cards now. And I think that's really important because you can't have a digital economy if you don't know who your citizens are, if they can't communicate digitally with government. And the kind of the foundation of that is to have one identity. You need to know kind of who are you talking to. And so a digital ID for everybody is essential, and we're going to get it. Maybe, but, you know, we don't know for how long Starmer will continue to be PM. I mean, there's so many questions around all of this stuff, but just their ability to get stuff done. And I think that's probably the stuff that even in and amongst all the optimism that we can have for all the potential and the possibilities, it does put a few clouds up on the skies.
I wonder if Andy Burnham will actually challenge Starmer for leadership. We'll see.
But he's already done it, hasn't he?
What's wrong with Gatwick? Why are you hating on Gatwick? I just flew into Gatwick.
Anything south of
Gatwick.
the river, darling. Mads is very anti-south.
Well, I mean,
he gets a nosebleed.
I see. 20 minutes, 25 minutes from London Bridge. What's wrong with that? That's fine. I think it's pretty good.
Yeah, and actually, Gatwick
which
is
end of
actually
London Bridge?
Gatwick is actually an easy win, right? It's 2
Or
billion.
King's Cross.
It's not 25 minutes. Stop.
It's not far.
Maybe if you have a
it's-
helicopter.
It's 32 minutes.
It is. The Gatwick Express is not hideous. I'm slightly pro and prejudiced, but
Well, you live across the road from it, don't you?
I do. I would love an extra runway here. But hey, listen, as long as it's not held up by newts or bats or whatever, then I think it's
but
gonna
also,
be
I mean, Gatwick is
anything
a
is
relatively
win.
easy win. It's 2 billion. You're moving one runway 6 meters laterally, right? It's 2 billion, right? Heathrow involves rerouting the M25 into a tunnel. The whole thing's going to cost 50 billion, right? On an asset that's already got 20 billion of debt on it. So, and the government aren't going to materially put a lot of money in. So actually, in terms of quick wins, I agree with you, Mads. Like Heathrow is the thing that we should be most excited about. But Gatwick's a nice quick win.
We need both.
And actually, it's a defeat.
Absolutely,
It's
let's
a
do
defeat
it.
it's a defeat for the NIMBYs, right? Because there's tons of NIMBYs in that part of the country, and they managed to get it through, including Dan. Sorry, Dan.
I'm right.
All I'm trying to say is I hope it's not that people now go, oh, great, we have another runway at Gatwick, then we can take Heathrow into the long grass for another 10 years because we just can't afford it.
Maybe Boris was right all along. Maybe.
As in putting it in the city. Putting it out east.
Out
Thames
east
Estuary.
in the estuary.
He
Yeah.
wanted to put it in the
But it
estuary,
makes
right?
more sense for the prevailing winds, right? If you've got the prevailing winds blowing all of that nasty exhaust air from all those planes across London, I don't know. I wouldn't
It's
want
not
to
so
live
good
in...
for the marsh warblers, but yes, I know what you mean.
Lomax, was this? Listen, I rudely interrupted you, but how else would you set the scene for the UK?
Yeah, and I think in a minute it would be worth talking about now the dust has settled a bit from the state visit last week. But before, I mean, if to set the scene and don't want to be too dour, but there is little to no growth in the UK. I mean, forecast just a little over 1% for 2025, and actually news just in today, the US is on track to grow at 3.8% this year, 3.8%. So despite all of the problems that people are talking about in the context of the US, actually, still growing at 4 times what the UK is. Inflation is persistently above target. Consumer price index at 3.8% is almost double the Bank of England's target rate. Wage growth is weak, and jobs, we have lost 130,000 jobs since the last budget at the end of 2024. And Labour don't really have a plan, and the budget has again been delayed to November this time, right? So we have sort of all of this hanging around in the air. Historically, high public sector spending as percentage of GDP. So it's now 42 to 44%. We talked about this before. And the thing that depresses me the most, and at least it's maybe a low base from which we can grow, is that 1% of FTSE is in technology versus 35% of the S&P 500 in the US, right? And again, we've also covered here before that the FTSE 100 market cap is $2.8 trillion, right? Which is less than individually each of Apple, Microsoft, Nvidia, probably Oracle now. So the final thing, which is really, really important in the context of AI, is that we have some of the highest commercial energy prices in the world. So we have all of this as a backdrop. There's tons of things to be positive about, which we can, ideally lean into, strong universities, great technical talent, simple legal system, more friendly business environment than mainland Europe. I mean, it's a pretty low bar if you're comparing yourself to the notaries in Italy, but at least it's something. And actually, I would say, if you want to look at kind of individual examples, just take the last month or so, there is really interesting, good things happening, right? So, Revolut, as of this week, have just moved into their brand new shiny offices in Canary Wharf, right? That signals a bit of a changing of the guard. They've just announced they're going to reach 70 million users by the end of this year and 100 million users by 2027. I think by my back of the envelope math, that takes them to a sort of 10 billion top line in 2027, which is outrageous. And we know that venture is not really about cohort numbers. It's not about looking at all of the kind of blended inputs and outputs. It's really about looking about the number of outliers that you have, right? So in the US, you've obviously had these multi-trillion-dollar companies emerge from the venture ecosystem. We're nowhere near that in Europe, but now at least we might have our first $100 billion company that comes out of the last 10 years, right? So I think that's huge, and that's in the UK. So I think that's really, really, really good. And then if you look at the strong cohort of AI companies kind of following on, Wayve, ElevenLabs, Synthesia, Cleo just became a unicorn. So I think, if you look at the micro level and all of this stuff percolates and trickles through, because we all know that, talent will grow and leave these companies and set up their new companies. It also builds sentiment. All of this stuff is really, really good. So there is stuff happening. I won't go on to talk about last week, but I think maybe we should at some point soon, because I think there's some interesting things that came out of it.
And then I want to bring Andrew in to set some more of the scene if you have anything, Andrew, and then let's get into what should the UK do and what's next. But Lomax, just close off.
Well, I think just because reflecting on last week is, Trump had his second state visit. It came at a time of immense turmoil for Keir Starmer. He'd just done a couple of, he fumbled a couple of, reshuffles. He had the Angela Rayner debacle. There's now issues with Morgan McSweeney and party financing.
And Andy Burnham, Andy
Burnham in the wings, and he's now got Lucy Powell, who he kicked out of the cabinet recently, potentially going to win the deputy leadership now. So there's a bit of saber rattling going on within the Labour Party, and clearly Reform are now at 35% in the polls. So, in a way, ironically, Trump flew in on Air Force One to slightly add some respite to poor Keir. And
a bit of distraction.
A bit of distraction. Actually, I would say there was a bit of a love in last week, and Jensen actually took, and Mads touched on it. Jensen's very, very bullish on the UK as an announced big investments, and Nvidia has announced this 2 billion capital pot alongside some of the London venture funds to invest in startups. It's committed to investing 500 million into Wayve, the AV company, and tens, probably hundreds of millions into ElevenLabs. So at the individual level, that's really, really good. At the headline level, there's this $150 billion kind of investment that has been kind of come out of this. I think that's a bit of a headline figure. If you look through it, 100 billion of that is investment over the next 10 years by Blackstone, the private equity firm. They were probably planning to do it anyway. There's 20 billion coming investment from Microsoft, who are probably investing that anyway. But actually, there is individual bits of investment, 1.5 billion from Palantir of new money, 4.5 billion from Prologis to invest in the Cambridge Biomedical Campus, and weirdly, the Daventry International Rail Freight.
Bring on Daventry.
It's not all tech, but I think, look, 150 billion headline, you fickle through it, you go, the numbers are a lot less, but this is the context there is that normally, outward investment into the UK is normally only about 20, 30 billion a year. So these are big numbers. We've also signed something called the Technology Prosperity Deal, which is a non-binding MOU, which sets forth, interestingly, as always with the US, when you read through it, it seems to be a bit one-sided. So there's kind of loose talk about doing $350 billion of kind of deals together, which is a bit vague. When you look through the stuff that actually bites, the UK commits in the next 5 years to buy technology and products from US tech and defense firm. That's almost a hard commitment. And we've also, which I think is the right thing, we've committed to get full independence from Russian enriched uranium by the end of 2028, right? So that's probably a good thing all round. But the sort of hard commits actually are on us, but rather than on anybody else. But I think that's a good thing. As always, this will be forgotten about in the coming weeks. But look, there are actually some tangible deals coming out of this, and it does seem that the US is, despite being pretty down on Europe, has actually, I wouldn't say necessarily is quite bullish on or quite long on, but it's certainly more favorable on the UK than it is on the EU. So it's actually one of the better things to have emerged from Brexit is to have this counterpoint to the EU. So I think that's a little bit of a small D Brexit dividend. The UK's positioned itself reasonably smartly. So yeah, and Jensen seems to love the UK. So that's great. That's all I'll say. Lots of love-ins with him.
You know what? Lomax's counterpoint to that is Google, Microsoft, everybody already invested massively in London before Brexit. So it's always been the favorite destination for US companies.
Yeah, true. Yeah.
Did you see
the? Yeah.
Did you see the GSK investment?
I saw the GSK investment, which is
Yeah, so
into the
$30 billion.
into the US.
$30 billion into the US. Yeah. So take out the Blackstone headline number, which we don't really know how much of that is real investment. I mean, if it's just them buying assets from other international investors, it's just money cycling in and out of the country, doesn't necessarily benefit the local economy a whole lot. But if you take kind of the 60 billion pounds of potentially bona fide investment, that's not a huge chunk if GSK alone is investing 30 bill into the US. So look, it's good, but it's not enough. We need more.
No, you're right, Matt. And there's
reform.
also there's £4 billion by BP, £1.5 billion by Sage, and actually, interestingly, bundled into this deal, £500 million by Revolut of investment into the US. It's amazing to see Revolut gone from startup to being included amongst
It's
these
incredible.
companies as peers.
What a powerhouse.
But as always, again with the US, quid pro quo, strings attached. Like they've extracted some pretty good deals for themselves out of this, right? So
I saw AstraZeneca going cold on the UK and doing more stuff.
Well, they've been doing that. They've been doing that for a long time. Obviously, they've got a French CEO. It's a probably broader discussion, but pharma is very
also
bleak on
negotiation.
the UK. Yes, it is. But pharma is very bleak on the UK at the moment. They're sort of, I think Eli Lilly have been coming out saying that, the NHS is massively beating them up on prices for drugs, etc. So I think there's kind of more to there's
we
more
need
to
some
come out of that
upside,
story.
kids. Andrew, I'm going to lean on you. You've been quiet, so we need some upside.
Don't
Well,
go to Andrew for upside. You got to the wrong person.
I know. This is possibly not the right square to pick on my call, but Andrew, I'm going to pick on you. What should the UK do? What's next? How do you take? It's all very well. Okay, we're at the lowest rung. We can only go up, right? So how do we do that?
Well, look, Dan, for a change, I'll make you happy and say something positive. So let's start with the Trump visit, right? Let's start with the state visit. I saw a quote in the Guardian saying, "Oh, it was grotesque pantomime," and I think this shows a complete lack of recognition and understanding on the purpose of a state visit, which is domestic diplomatic signaling, the scale of the ceremony. Communicates sort of how important the person visiting is as an ally or indeed as a rival. It's all about soft power projection. The pageantry showcases our culture and our history. It helps with domestic legitimacy, sort of reassures the public that we're not down and out, and that the public institutions are still operating, and we've got tradition, and we've still got weight in global affairs, and all these things. People, we love to. We're the worst people for shooting ourselves in the foot. But did you watch the pageantry for on the TV of the stage? It's for once it was super impressive. Like 1,500 military personnel. They were all lined up all the way up to Windsor. 120 horses. It was really impressive. You cannot fail to be impressed. And I should think Trump will be go away thinking about his 250-year anniversary next year and thinking, well, that's the way to do it. I've got to do something equivalent. So I think that stuff is super important. And whether we like his domestic policies or not, our job and the job of the political leadership and indeed the king is to ensure that the UK is best placed to capitalize itself for our society and for the people that live in the UK on trade relations and international influence. And so the idea that just because we don't like what Trump's doing in his country, we should ignore the guy or show him disservice, I think it's loony. The other good news is that going back to sort of data.
Have you got another one?
I've got another bit of good news. I mean, I'm always cautious on statistics because they're often BS. But if you look at the IMF and the OECD data, the projections for 26 through to 29 are that yes, the US will be sort of surging ahead at 1.8, 0.9, even 2% annual GDP growth, but the UK will be down at sort of 1.1, 1.2. But our rivals in Europe, France and Germany, are projected to be lower than that. Particularly Germany. I mean, it's projected to be down next year at 0.7%, and then going up to only 0.8, 0.9. So actually, we always look across the channel. There is hope, and if only we stop strangling our economy with regulation and crazy taxes and use the Brexit opportunity that we have, I think we would be far closer to those US figures. And so to answer the second part of your question, Dan, what do? We know what we need to do, but Labour government are not going to do it. And they don't have a plan. They don't have a coherent plan. And we're just seeing stuff go from pillar to post. So, let's hope Farage has a plan, because at this rate, he's the one that's going to be in next time.
Oh, I don't think so. I think there'll be lots of noise to pose him forwards, but I'm not convinced it will actually happen. I think we'll fall back to old faithfuls, but we'll see. Who knows?
I'll do another bet with you.
No, because I keep losing.
Listen, on U.S. growth, just throwing the curveball out there, U.S. fiscal deficit is in excess of 6%. Okay, it is a wartime deficit. It's a COVID-level deficit. It's an economy that's pumped up by government stimulus and AI. Now, AI is great. All right, some of the capex that's happening right now will not be productive, and that's fine. It's like the railroad build out, but we're still driving on those railroads today. Like, this AI stuff is going to be amazing. And yes, that's part of what's pumping up the economy. And the other thing is fiscal deficits, and they are nuts. If the UK spent more than 6% on fiscal stimulus, yeah, we could also pump our GDP growth up by a percentage point or two. But we all know it's absolutely the wrong thing to do, because the chickens will come home to roost, and that will long-term
also the
undermine the
markets
fiscal
wouldn't
strength.
allow it, Mads. The markets just wouldn't allow it.
It'll long-term. Well, you can almost monetize the debt. Right, you can always have the Bank of England buy the gilts if that's what you wanted to do. That's just going to hit inflation, exactly like what you're seeing in the United States, where inflation is being stubborn and not coming down. We know what we need to do, as Andrew is saying, and it's so frustrating sitting here looking at it. We need to deregulate, we need to pension reform, planning reform, and it's not rocket science, but we just have a really challenging political landscape right now.
One of the scary numbers, sorry, Dan, one of the scary numbers I saw, which sort of is one layer below these headline growth figures, is the productivity gap. The European Central Bank released some figures that between, I think it was 2019 and 2024, labor productivity per hour output, I think it rose nearly 7% in the US, but only less than 1% across the Euro region. So we always
that's
look
since
at
2008. I mean, if you look at all the charts, it's GFC and beyond is where everything. So
the reason I always pause for thought when sort of critiquing the US is just its ability to output, its ability to generate returns, its industrial output, and to regenerate itself is extraordinary. And we're just, as Lomax says, we're just slowing and slowing and slowing.
I completely agree. I mean, one of the wonderful things about the U.S. is the desire to invest in productive assets and equities. In the U.S., more than half of savings go into equities. In Europe, that number is, a tenth, probably 5%. Right? We're happy to put money into government bonds, and governments, they're running deficits, so they need to flock the bonds to poor savers that then can buy them and have low returns. And so you get into this death spiral of low growth, meaning that we continue to run deficits, which means we need to keep financing them, which means we need to keep selling these bonds to poor future pensioners that have flocked these rubbish government bonds instead of buying cool equities, so we can invest in companies that can, as you say, grow the economy, grow productivity, do all the stuff we need to do.
On all the European pension funds buying US equities, aren't they?
They're buying some, but overall equity participation is still woefully low.
And there are all these as the economy contracts, you lose confidence, and that has a huge knock-on effect for.
Well, you're a big sentiment guy, aren't you, Andrew?
Yeah, exactly.
You're always talking about sentiment.
Yeah, and I think it has a big impact on how CEOs make decisions and how they spend money, and you end up in this sort of death spiral. The FT did an article that was reporting that of the 2,000 top R&D spenders, it's nearly halved in the UK in the last 10 years. So when you look at, I think about 700 of them are US companies. It was sort of 250. It's now down to like just over 100 companies are UK companies in the last couple of years. So people contract, companies get scared, and instead of reinvesting and investing in innovation and, which trickles down into acquisition of startups, it has a huge impact. So we need some radical ideas and radical policies to try and to get that confidence back. It is all about confidence.
That radical.
No, it's not radical.
All that radical.
Well, he's a lawyer. Of course,
there is no radical.
No, that's a problem.
Well, we might get more radical than we want, right? I mean,
but even with Trump, let's say half the people in the US agree with Trump, but they're confident about it. So at least you've got half the people confident, and the other people, might not like it, but it's better than having everybody lacking confidence, which is what we have in the UK.
I can't marry that to his approval ratings, which is like so far in the bottom rung now. I don't understand. I don't.
But are you looking at net or right? Because it's pretty partisan.
Well, it goes back to Andrew's point: stats and damn stats. I don't know. I mean, you know that they have a bold leader that is making bold decisions, like, dislike, agree, disagree. So I don't know whether, I guess it's AI that's hiding some of the volatility and some of the crazy, and inertia that's hiding some of the crazy. So we'll see. We'll see how I'm not convinced that we can carry on at this trajectory. And I guess that would lead maybe to the last question, which is all around, is where are we on the bubble territory? Obviously, you hear lots of doom and gloom as, mapping to GFC, mapping to .com. Where are we, Mads? Maybe you can take this one. Where are we in bubble turf?
There is certainly some froth, that's for sure, and we've seen some really, really exciting deals happening. I think you were, talking about sort of the, OpenAI and Nvidia deal, the OpenAI and Oracle deal, and then the Oracle and Nvidia deal, and sort of, how that goes around. There's been an attempt to align that and compare that to some of the AOL issues of 25 years ago, where AOL did literally revenue round tripping, sort of illegally, masquerading stuff that's just going round and round as revenue. I don't think that's what's happening here at all. I think what's happening here is you've got Jensen Huang sitting and making equity investments into his, either supply chain or into his customers, which I think is completely legit. We've also seen others do that. AMD are involved on the other side, right? I think we were going to unpack that maybe in the AI corner around the
let's go there
Cohere
now,
investment.
Let's just go there, because I think, to your point, there is a lot of big tech investing in each other, buying from each other, which is where I think you're unpacking.
Well, yeah. I mean, so you could say this is a symptom maybe of a bubble, right? It's everybody just propping each other up. Jensen is a super smart businessman. I actually think, when he says he's seeing an incredible opportunity in OpenAI, I think he's right. I think that's a great opportunity, and I think it's a smart investment he's making. And we've seen others do the same. Cohere has raised new money. Part of that is coming from AMD. Of course, they want to try and lock Cohere into part of their tech stack. And so it goes. We've seen Modular raise money to challenge Nvidia, which just goes to show how big the prize is and how many people are wanting to try and get a piece of this pie. So are we in a bubble? I mean, certainly there is froth, but I don't think this market is going to collapse in the next couple of months. I think it's got plenty more of runway to go. Yes, at some point there will be a correction. There'll be a major correction, right? It always happens. It happens every time. But that doesn't mean that a lot of the investments that are happening now aren't going to be productive, just as was the case 25 years ago.
Well, there is a little bit of circularity going on. Amazon and Google buying and investing in Anthropic, Microsoft with OpenAI. Microsoft's original $1 billion in OpenAI is now $14 billion. Amazon investing $8 billion into Anthropic, Google investing $2 billion. OpenAI spending $30 billion with Oracle, committing to another $300 billion over a 5-year commit. So and even Meta, who's building their own infrastructure, they've signed a $10 billion deal with Google Cloud. Obviously, while planning the $600 billion investment, or whatever Mark Zuckerberg whispered under his breath. Is that what you wanted us to say, Mr. President, in the Oval Office? So there's a lot of circularity going on in there, but there is also a lot of fundamental activity. But it does feel a bit bubbly. Lomax, what would you focus on?
Well, no, I was just thinking. Look, I mean, let's just look at some numbers. Like let's look at price to earnings, right? In Nasdaq, for example. So now I think trailing 12 months, we're at roughly 32 times in Nasdaq 100 against a kind of historic average of around 25, 26. So it's higher, but it's not like bubble higher, As Mads has touched on, and all the big tech guys have already admitted this, like some of this capex is going to not yield the return that people are expecting. Everyone is in this platform shift mindset, and we use AI. We invest in AI products. We use them every day. We see the power that they can drive, and we've seen the adoption. And so there is substance to what's going on. My big fear on a slightly longer term is that when people look back, is the productivity gains that we get from AI at the kind of macro level aren't as big as everyone's expecting. I actually wouldn't be surprised if that's what happens. Yeah. Which means that spend will cool off a bit. I'm looking at some of these vertical AI companies now, and they are going from 0 to 10 million of ARR in 10 months. That's relevant because there's a lot of buy-in at like the CTO level, from the board level, from the chief executive down to the people who are actually buying this stuff, there's a lot of budget for this now. But, you know, at some point, someone's going to be demanding productivity gains off the back of that. And if they're not seen, then there will be a cooling off of budgets, which will flow through to all of the stuff we just talked about. You know, less demand for AI, less demand for compute. You know,
Well, how
that's
much
the
compute
bigger.
do we need? This is what's on my mind, is how much compute do we actually, how many data centers, how much energy provision,
It's
More.
how much compute do we
Lots,
need?
lots more.
You know, look, I think this is look to history, and actually someone to go on a tangent, but it's just it's to illustrate a point. I
You're
saw
going
a
to tulips. Is that where you're going?
no, I'm going to paddle courts. And
Okay.
I was
Super
reading
random.
an article a couple of weeks ago about the paddle boom. I mean, it's a paddle boom in Stockholm, where they've just built more
Was it just
paddle courts.
VCs?
Yeah, you know, and there's like photos of all like just like paddle courts all over the shop that are now standing empty, right? And so my point is that it's kind of, if you look at, you can talk about tulips, you can talk about the internet and .com. People are going to over invest and be over exuberant because it's just like they don't want to miss the boat. That's going to happen, I think. But the reason why I started what I just said at fundamentals is at a fundamental level, we are not smoking too much dope at the moment. Yeah, we're a bit high, but we're not completely off reservation.
Yes, not super nuts.
Well,
Andrew,
because look, I mean,
Andrew-
because these guys, look, I mean, Nvidia has gone from 250 million of gross profit per quarter to 25 billion in 2 years. That's real money. That's cash. So, you know, people are buying this
Yeah,
stuff.
of course. No, but yeah, absolutely. But so for every time somebody says that, right, somebody else will say, well, great. But for every time Cursor's got $1 million of revenue, they're spending 2 million with Anthropic, that's spending, 3 million with AWS, that's spending, 7 million with Nvidia, right? So it's negative margins all the way up the stack. And where does that end? And of course, the Cursor guys, they'll say, well, the cost of compute is going to come down because we're going to have much, much better inference models. Well, that's going to impact somebody somewhere.
Of course.
And, I think, so the thing is, we're all looking at this and we all know there's going to be a huge pie. And I think it's just, it's obvious to me that nobody can say with certainty exactly who's going to capture the profit longer term. What we've seen from prior trends is that it usually starts in the hardware layer. Right, so you had IBM capturing. You couldn't even buy the machines, right? They captured all the profit with hardware, and then it shifted to software. You had around the .com boom. It was mostly hardware in the beginning. You had Sun Microsystems, you had EMC, you had Cisco. That's where the profit was captured, and then it moved up the stack and it moved to software and applications. And I think we're seeing some of the same thing again now. Nvidia is capturing everything. They've got the chokehold, but there's going to be a lot more competition there, and you're going to see the value move up the stack, up to the application layer. So I think that's going to be history repeating itself.
Yeah, and actually, in a way, so there's the productivity gains that I talked about, people being less happy with the results from that. But I think there's also just like the commoditization of what happens at the level Mads just talked about. Everything gets cheaper, and that's where there's going to be a massive cooling off. That's probably why I wouldn't be buying Nvidia now, for example. I don't, not investment advice, but
Andrew, are you gonna chime in something here? Upsidey?
I mean, I think the need for compute is going to be exponential for a while. The unknown is when you get a step change in technology, which will commoditize it. If Nvidia doesn't buy the company that comes up with something that's a step change different, that uses 100 times less power, or fusion power surprises us and comes online much sooner than we thought, lots of things can happen. And we often think about technology and gradual changes, but it doesn't. Something becomes commercially scalable, and that technology then turns everything upside down very, very quickly. And that's partly why the markets we work in are so exciting. So I think I don't think there's a data center bubble yet. I think there is probably a bubble in some of the application layer AIs, as we've talked about before. What's quite interesting when you look at going back to startup land, the US, I think about 2/3 of all US VC dollars in the last year or two have gone into AI, but only a quarter in Europe. So again, is that Europe and the UK not seeing just how big this opportunity is? Because sure, you'll be able to turn around and say, well, look at all those dollars that were wasted in those companies that went bust, but this is a power law game. So of course, from that 2/3 of all US VC dollars, from those enormous rounds, all of which in the US are still about, a half to 2/3 larger and higher valuations than the valuations in the UK. There's still that valuation arbitrage. There will be some huge winners which will pay for and create ongoing companies that we'll hear about for the next 20 years. So there is still this disconnect on comfort. There's a lack of comfort in throwing large amounts of money at what is the future that we all know the future is. And I think that's reflected back into where we see VC money going still in the UK and the US.
Yeah. Well, let's talk about some of the more riskier issues around AI and the cyber attacks that have been going on. And JLR in the UK is obviously still closed. I think it's 3 weeks in. So AI is increasing risk and creating more issues around cyber attacks. That's creating better phishing, impersonation, social engineering, automating scanning and attack orchestration, faster exploit discovery, and obviously new techniques. So AI is pushing the cyber issues across all of the large organizations that we need and know, and many of the smaller ones. We had Co-op, TransUnion, Marks and Spencers, and even the VC firm Insight has been affected in the last year. So I don't know if anyone's got any thoughts. Is it just a case that AI will solve itself, and there's an AI to solve the AI that's enabling more of these cyber attacks? I don't know if anyone's got any thoughts on what's happening with cyber.
Yeah, the issues at JLR are very real. As you say, we're 3 weeks in. We have tens of thousands of vehicles that are being impacted and production is delayed. We have tens, if not hundreds of thousands of supply chain jobs at risk. We have suppliers laying off their workforce. We have companies that threat of bankruptcy. This is a big thing. I mean, this is a group of hackers that have brought a kind of a 15 billion pound company to its knees in a massive supply chain, and it's got systemic risks for the country. And it sort of begs the question: when does cyber damage spill over into something that we would look more of as a sort of a kinetic attack on our country, right? If a foreign power had flown in and bombed for billions of pounds worth of infrastructure, we would consider that an act of war. And so what's the correct response here? It does seem to me that we've moved to a new DEFCON here. It's a new level of threat to our economy and to our national security, and it justifies a more serious response. Perhaps also in the context of some of the more, perhaps not kinetic, but certainly very physical intrusions we've had from Russia in parts of Europe here over the last few weeks.
Andrew, anything from you on cyber and the AI connection and what we can do about it, perhaps?
Yeah, I mean, the cyber attacks just keep increasing. I think Russia's responsible now for the most number of sort of proactive cyber attacks internationally.
It was North Korea and Russia, wasn't it? When they like 80% of all attacks, something crazy.
Yeah, I mean, any report, any graph you look at, always going up and to the right. There are about 1,000 companies and institutions reporting significant, ransomware incidents in Germany, just last year. And that's reflected across, Europe and the UK and in both on interstate and private crime. I think the activity from CrowdStrike reported last year, an increase of Chinese source activity across all sectors up by nearly 200%. So it's only going one way. Some of that is AI driven, some of it is geopolitical driven. But yeah, it's going to be a rough ride.
What's the right response? I mean, Andrew, do you have any thoughts on that?
I think make sure GCHQ is very well funded. Until recently it wasn't. They have increased the funding. So that's something, and an area actually where we do have superb skills, and we should not under-resource that. We can be a global leader, even versus the US. My understanding is we were ahead on the US in some of that stuff until recently. So that's an area that I think we should triple down on, both to protect our nation state, but those skills and that knowledge obviously filter into the private sector as well. And yeah, make sure we're funding the businesses that are going to protect our other businesses.
So there's an opportunity for startups, do you think?
Yeah, absolutely. 100% opportunity in cybersecurity.
What's the biggest exit that happened this year? Wiz, 34 billion. What's the biggest exit that came out of the UK in the last couple of years? Darktrace, bought by Thoma Bravo, 7 billion.
Where were they for JLR?
Well, but yeah, you say that, but the point is, cyber's from an investment perspective, and I don't know how much cyber you guys do. It's been a very technical, quite difficult area sometimes with funky business models, a lot of this kind of managed service provider kind of model. Like it was generally reserved for the specialists, and maybe it still should be, but it's certainly, if you think about the proliferation of AI, and then you talk about physical AI, the proliferation of kind of robotics, we are being driven around by AVs, by robots, and we have more robots in our home, not just doing our hoovering, but doing everything. The more connected we become, the bigger a threat cyber becomes. So, cyber is an investment. It's not like a new thing. Like, we've already just seen it. The two of the biggest exits in the last 24 months in the UK and the US have been in cyber. So, it's already there in front of us. But I think it's only going to go up and up as a concern. Just if you talk to a, small to medium or even, family business or business, private equity backed, cyber is top of the risk register. Absolutely top of it. And I bet you they've underinvested in it because it's boring, it's technical, it's difficult, and it's constantly changing.
It's not a discretionary spend anymore. And I think it was viewed as a discretionary
and it used
spend.
to be. But it's funny you say that though, Andrew. I bet you, a lot of old economy companies are only starting to wake up to this now, right? Yeah. It's very complicated.
But it's a huge market though as well. I mean, I think the cybersecurity market until recently was sort of quarter of a trillion. I think it's projected to become $500 billion by 2030. So I mean that's a big market, yeah, exactly, and it's something that people cannot ignore.
My sense is the cat and mouse is very much in the cat camp, where I'm not sure for an organization the size of JLR what they could have done to have prevented the attack. I don't know how it came in, but there are so many smart ways, and the human is always the weakest link. That crappy password, or that thing left on the train, or that USB stick, or whatever it might be. So I'm just wondering what's the reality of being able to genuinely protect these massive behemoth companies when you have a not very smart human who has to interact with the machine that can be attacked in so many ways.
Also had no cybersecurity insurance in place.
Oh, JLR didn't?
No.
Oh.
So all those listeners, CEOs out there right now listening to this podcast, recommend you check your insurance policy has.
Yeah. What about
coverage.
the world where we use more agentic workflows in our businesses, right? How immune to cyber? Probably not. Probably the opposite.
What could go wrong, Lomax?
Yeah, my AI disabling your AI.
We have a startup doing exactly that called Gatling X.
Oh, get in the plug, my man. Get in the plug. You go for it. Well, listen, let's stay in defense, and then we're going to roll back to H1B, because I do want to touch on the talent flow, if there is, but let's stay in defense. So again, there is a lot of noise, not only about AI, but also about defense. Russia has buzzed the tower now in Poland, Estonia, Denmark, and Romania, allegedly. Maybe I need to use the word allegedly, but it looks like there is some Russian naughty NATO poking going on. Then we had Trump's UN comments about Ukraine, which has obviously excited defense stocks in Europe. And on top of that, there's lots of US cash still pouring in. Analysts suggesting that Europe will see an annual average growth rate of 7% in defense across the next 10 years. Which would be nice. I think there's some crossover and some blurring and blending of that defense spend that will go into the broader economy. European aerospace and defense index has tripled since Russia invaded Ukraine. So maybe to Mads's point, maybe we are already in World War III. We just don't know it yet. I guess the broader question is, how will this kind of come down to startups and investing in our world? But Mads, to start with, can you give us a little bit of a backstory or just fill some gaps for us?
I think you've touched on some of it already, Dan. On September 9th, 23 Russian drones entered Poland. Some Dutch F-16s shut down some of them. And these were, to my knowledge, the first NATO shots fired in this conflict. And probably also the first time many of the countries here, Poland, Estonia, and others have been invoking the Article 4 of the NATO treaty. So we've had issues in Copenhagen over the last few days. We've had Copenhagen Airport shut down. We've had Aalborg Airport shut down, and others with sort of multiple drone sightings. And the defense minister of Denmark came out earlier today and sort of said, look, this is not a prank by some kids. It looks like a very sort of a well-planned, well-coordinated operation. And so it seems that there's a clear pattern here. Russia is violating these airspaces, And the question is, what are we going to do about it? Trump has been very hawkish. He said, NATO should just shoot down whatever Russian aircraft comes close. And we saw that was what the Turks did. I think in 2015, a Russian jet made its way into Turkish airspace and was promptly shut down within 17 seconds. And so raising the question whether we should just take a similar approach. But it's clear that we have to have a response. We can't just pretend as if nothing is happening.
Yeah. Lomax, what would you add?
No, I think, I was going to go to the Turkish example. I think it's a great example. Erdogan is not one to mess about. The Turks and the Russians, there really is no love lost between them, right? So I think, maybe it was a clearer cut case, but in that case, it was incursion for a few seconds, as Mad said, and they shot it down, and a Russian pilot actually died in that, right? He actually got shot. He got shot down when he was parachuting. Down. Yeah. So it was dealt with a firm hand by the Turks. And what have you seen since then? You haven't seen any more incursions in Turkish aerospace, at least that I know of. So, this sort of firm approach, and actually it's good to see. Donald Trump, as we know, changes like the wind, but at least this week in New York, he's been on the kind of firmer side of the Ukraine-Russia dispute. So that's like good to see. And ultimately, as my old headmaster used to say, I bully the bully.
Yeah, well,
you got to stand up to him.
That's what strongmen allegedly listen to. And Trump has done a very good job of just going, well, there you go. I think you can win all your territory back. Over to you. Off you go. NATO.
I was going to say any big conflict that involves NATO or other European countries will likely start small unless it's an all-out attack, sort of nuclear-esque. I think Russia, if it is Russia, is testing, probing, annoying, irritating to see what our response would be. We saw that on a larger scale testing with Crimea before invading Ukraine. Don't forget, Estonia, I think it was 2007. Wasn't there a Russia-backed attack on cyber attack that shut down sort of banks and media and government, etc., which invoked Article 4 of NATO, but it ended up in consultations, which translates into a non-military response, and so the response was very much political and defensive. So if there's an immediate threat, obviously there'll be a military response to that. But I think almost what's more interesting is we can argue whether it's a false flag exercise or whether conspiracy theories, whether it's Russia or not, but what it does highlight is just how vulnerable Europe is. And I think that's what we need to focus on. We need to focus on how we ensure that Europe has greater resilience and what we do about that. And that's more important almost than, attributing whose these drones were in my head.
Well, Mads, you've got some of the defense stocks figures, haven't you? What's going on in reality?
So Rheinmetall, the German defense armaments manufacturer, they're up like 175% or so this year. So they're worth about the same as Volkswagen. And I think you've been saying before that defense is Germany's new auto industry. And they do need a replacement because the automotive makers have been struggling. And we know the BAE Systems, they're at record highs. They've got a £28 billion order book. We know that kind of with NATO adopting a sort of 3.5% GDP core defense spending, plus another percentage point and a half for cyber and infrastructure, there is, hundreds of billions of euros and pounds being spent over the next few years. It's a generational rearmament, and we need that because we have been behind. We've sort of been, sleeping under this security blanket provided by the United States for decades, and so it is time to invest and to wake up.
No, I think to be fair, like that investment is happening, right? The governments have made the announcements. Even Boris Pistorius today was at the space conference in Germany talking about the huge investments that Germany's going to be making in defense and space in the coming years. So we've seen these budgets already. We had the strategic defense review in the UK earlier this year. Like the numbers will trickle through. we all know these things do take time to trickle through. But even if you look at the private markets, unlike the public ones that Matt just talked about, there's been 2.5 billion euros have been raised since the start of 2022 in sort of early stage or private markets, European defense techs. That's 1.5 billion in the first 7 months of this year. That is up from just 30 million in 2020 and 150 million in 2021. So these numbers are up big time. And we now have 3 unicorns, Helsing, Quantum Systems, and Tekiva, that have been minted in the last 12 to 18 months. And Helsing has raised over 1 billion, valued at 12 billion today. In fact, today they just announced their new unmanned fighter, which looks hugely exciting, will be coming online in the next 2 years. So we're looking at kind of iteration cycles that are a little bit more akin to traditional tech. You know, if you look at the kind of, I think it's FCAS, the current, you know, next generation fighter jet being developed by the Germans, the French, and the Spanish. I mean, they're constantly fighting. They're trying to kick the French out, I think, because the French want to, you know, they're not getting a big enough share of the pie. So these things, you know, when you talk about next generation fighter jets, you're talking about decades. You know, I think you still need fighter jets and drones, or potentially, or maybe they'll be obsolete by the time they come out. But if you look at what's happened with Anduril in the US, but you're seeing now with quantum systems, with Tekiva, with Helsing in Europe, we're moving to a more iterative, kind of faster paced development cycle, a bit like what we're seeing at the micro level in Ukraine with drones, for example. And so that can only be a good thing. So the money's flowing in, the speed is there, and actually it's happening. But unfortunately, you know, the buyers here are governments. So this stuff necessarily, it takes time.
They're keen.
No,
they're
keen, but but you're still selling to governments. You know, you still have procurement cycles. You still have, sometimes you have, and there are, and, you know, you talk to founders, each government does have little pots of money that can move incredibly quickly, almost overnight, and jump normal procurement cycles. But most of it goes through the traditional procurement channels. And, you know, as Mads just said, as we've been sleeping under the security blanket of the US, there is a lot of basic stuff, you know, barracks, lighter ladders, like really basic stuff that they haven't even got.
HR platforms.
Yes.
All kinds of weird and wonderful.
Well, as we talked about before, because of GDPR, the Germans can't even find their reservists because they've redacted the names or the addresses or something. So, you know, there's a lot of basic stuff. So, you know, this is all great. The numbers I just talked about are crazy. It's gone from 30 million in a year to 1.5 billion this year. I mean, this is like exponential. Obviously, the other ingredient here is talent. We're seeing smart tech founders. Let's not forget, you know, 8-9 years ago, or not even like 7-8 years ago, all of the tech talent in the US was resigning when Amazon and Microsoft were doing these defense deals. You know, we were in the kind of peak woke kind of tech employee kind of era. Now, with Anduril, with Saronic, bring it on. And so actually the smart founders and smart employees and engineers are wanting to work on these problems because they can see the big grizzly bear on our doorstep. So,
well, let's talk about talent. I'm very conscious of time, but before we sign off, I do want to talk about talent and H1B visas. Now, if you don't know what an H1B visa is effectively, it's a way for American companies to hire foreign talent. And from what I can see, it's a lot of Indian and Chinese talent, mainly tech. I also wondered how many of the existing CEOs in tech started their careers on an H1B visa, and it's all of them. It's Google, Tesla, IBM, Microsoft, Adobe, all started their careers on H1B. So it's a big deal. And there's about 85,000 issued each year. Now, here's what's happened. On September the 19th, Trump signed an order imposing a $100,000 fee for H1B visa holders. And it wasn't quite sure how that was going to be applied. So there were lots of people abroad who were on an H1B trying to get in before Sunday so they didn't have to pay $100,000. However, that's whether that was backtracked as policy or whether that was not intended in the first place. That wasn't how it was going to be rolled out. And it is for new visas, not existing visas. But it's a bit of a shot in the foot, we think, especially since the previous cost or the prior cost for an H1B was about $1,500. It's gone up massively. So obviously Trump is aiming to protect local jobs and American jobs, but it feels like a shot in the foot and it feels like an opportunity for Europe. Mads, is that true or nonsense?
I think you're spot on. I mean, it's clear that there were corporates that abused the H1B visa system and some reform was probably overdue, but this seems to be a massive own goal and it's a gift to the United States competitors everywhere. And I think London is probably in prime position to take advantage of this. You know, it's a perfect fit for, we didn't really get to cover this 29th regime idea earlier, but the idea of 24-hour visa for all roles above 100K, I think it's an obvious thing for us. I mean, you could put a small fee on it, kind of administrative, but, you know, great to say to all these tech companies, you know, whether it's our own startups or startups from elsewhere, you want to build up your AI labs, you want to build up your tech labs, come to London, you know, easy access for top talent. Let's do it.
I wonder how that'll play with the populist anti-immigration chat. But Lomax, what do you reckon?
I'm less optimistic than Mads. I would say what this probably plays into the hands of is the big tech companies in the US. Because
Yeah,
if
because they
they're
don't care, right? Big tech, it doesn't matter. But
nothing.
medium and small, $100,000 is a big check.
Yeah. But if you're hiring, engineers that you're paying 300, 400, 500 grand a year to, and you've put all the effort into finding them and recruiting them and whatever, and they really are the best, it's an absolute rounding error. So yeah, sadly it does. There is an opportunity for sure for Europe. But sadly, what's happening in the UK at the moment is that net migration is up, but skilled migration is down. There's a real issue with it. Yeah. And so, yeah, it's an opportunity for sure. But I'm just less optimistic that it will actually flow through because, don't forget the wage comparison. Yeah. Like the US, even the startups in the US are going to be paying a lot more. Right. So, yeah, there is the 100 grand issue, but UK still is not as attractive on a wage perspective. Yeah. So I think that is it's not an overnight. This is not an overnight sudden influx that we're going to see.
I think we're overdoing it, Lomax. I think we're overdoing it. I don't think the majority of these roles are, 400 grand a year roles. Yes, of course, they're in the mix, but there will be lots of roles that are in the 80 to 150K range.
I'm not so sure, man.
Because
it's over 50% of these are taken by the FANGs, right? Taken by 10 big tech companies, basically, over 50% of the H1Bs. And the rest is a long tail of like the Deloitte, Accentures, large Indian IT outsourcing companies. I think universities and academic institutions, especially those tight on budget, might think twice before now doing it.
What about the cultural side, Andrew? Do you think there's any issue around it being kind of like a two-finger salute to anyone that wants to come? Do you think there's
I
a
don't think people care.
side?
People are selfish. They're not going to make their career decisions based upon whether Trump's sentiment. They're going to make it based upon where they want to live for their kids, their future, what they're going to say. So I'm with Lomax. I think we'll have a marginal impact, frankly.
It's not as if reform 35% in the polls, 100,000 people marching with Tommy, whatever he's frigging called, with Stephen Yaxley.
You know what, Lomax, they're not going to care about 10,000 AI developers, and you know that. That's not the people that are the target of this demonstration.
No, those people, Mads, but it's sentiment. It's that sentiment of like, is the UK open for business and is it welcoming to people from around the world? Yeah, maybe slightly more than America.
Your view is people are not going to want to come here. Is that the idea?
No. So Dan asked the question, is there a perception that, this gives to people that, the US is not such a friendly place to migrate to? And I think he's totally right. But I'm suggesting that if you look at where Europe is at the moment, and I'm sitting in a country which is traditionally very left of center, and it's just passing their new law against foreigners, but their foreigners law now, which is tightening up a lot of
like you.
And I'd be careful.
Kick the foreigners out.
But my point is that, you look across Europe with AFD, with Kikl, with, Orban, with across everywhere, with, Front National, whatever in France, and where reform is in the polls. I'm just suggesting that, to the outside, Europe is not the most welcoming place. Maybe a little bit more welcoming than the US. But if you're a top engineer out of India, it's like I don't think it's gonna,
I've got something to finish on actually, Dan, which because I didn't get my word in earlier. Lomax was talking about the FCAS.
The floor is yours, my dear man.
He was talking about the European next-gen fighter.
Yeah, exactly, which is your domain. So I should not. I should not encroach on that, Andrew.
Well, being an aerofoil geek, I was just going to say that it's fascinating to watch it play out and us not have to deal with that, because obviously with the Eurofighter Typhoon we were part of that program, but basically it's the Dassault, which is a family-run company, kick up a fuss and trying to get more in charge and stipulate, what the Germans should not or should not build. The Germans said, well, maybe we'll eject from the from this coalition of the willing. And Dassault said, fine, go away. We'll build it ourselves. We don't need you. And of course they have with the now I can't remember the name of the jet because I'm not going to advertise it. But the Dassault Mirage, is it? I can't remember. But there's a wonderful quote. We have a long tradition in the UK of aircraft building. And Sir Sidney Cam, who built the Hurricane, which is the sister aircraft of the Spitfire, had a wonderful quote. He said, in the 60s, he said, all modern aircraft have 4 dimensions: span, length, height, and politics.
Ah, I love it.
There you go.
We are running out of time, lovely people. We're going to pick one deal of the week. Lomax, I'm going to pick yours. Nscale, tell us.
So Nscale has just announced today, so this is a UK AI data center startup, only founded in 2023, have raised a massive 1.1 billion round at a 3 billion valuation, becoming Europe's newest unicorn. Recently signed deals with OpenAI and Microsoft to grant access to their facility in Norway. It's now raised over $1 billion. The round is led by Aker, A-K-E-R, not a household name in tech investing.
No,
it's a
I was
Norwegian
expecting
energy.
an American. Okay.
Well, as always in Europe, it's a corporate effectively, as far as I can tell. It's a Norwegian energy and industrial group. So it's that.
Come on, Nscale. Let's do more. Well, I also saw the data center push, the broader data center push that I think Jensen was talking about into the UK, and obviously the 120,000 Blackwell chips coming in. So they're good.
We should give a
More
shout out
data
to
center stuff.
Aura as well, Dan. I mean, you wanted to talk about that. Surely we should talk
No,
about that.
I've got an Aura ring, and I've always loved them. I just never realized the scale of the business. So they have just raised $875 million Series E, bringing their valuation to 11 billion. It's
5.5 million rings sold.
What? It's like it's just a health ring. I was like, what the frick? Anyway, we have run out of time. We are going to move on. Thank you so much, gentlemen, and I will catch you all next week.
Love to see you all.
Thank you, sir.
Bye.
Bye-bye.
Upside.